Hi guys, welcome to my video. My name is Chris and I have been in the financial industry for some time. I've also been trading for a while with many brokers and I want to show you why I believe that TIOmarkets is the best Forex broker around. So in this video, I will give you a brief overview of what the VIP Black account is. I will also explain why the VIP Black account is ultra competitive and show you how trading conditions can impact your performance. Furthermore, if you stick around to the end, I will show you how you can get the VIP Black account for $500 instead of the usual $3,000. So with all that being said, let's get straight into it. As you can see, I am on TIOmarkets website and the VIP Black account is their flagship trading account type. What this trading account allows you to do is to trade from 0.4 pips in spread and $0 in fixed commission. These are ultra competitive trading conditions which are difficult to beat, especially when you get fast free withdrawals, generous leverage and excellent customer support. Next, I'm going to take you onto the trading platform to explain why the VIP Black account is ultra competitive and also show you the direct and indirect benefits of trading with tighter spreads and lower commission. So here I am on the MT4 trading platform. I will show you how to create your own VIP Black account in a bit. That is very straightforward. But first, I will outline the direct benefits of trading with tighter spreads and lower commissions, and then I will talk about the indirect benefits. The direct benefits are the more obvious ones. You save money on the transaction fees because you have reduced your trading costs. However, there are many people who don't know how to calculate the total cost of trading accurately enough to compare trading accounts between brokers. So let's start here. When calculating the cost of trading on any Forex broker's platform, you have to take the spread as well as the commission into account. The spread is usually variable, but the commission is fixed. You can calculate the spread for any symbol by subtracting the bid price from the ask price. The difference between these two prices is what we refer to as the spread. On the MT4 platform, you can simply right-click anywhere in the Market Watch window and then select Spread from the pop-up menu that appears. You can see what this is in real time in the last column here. So for the Euro USD, you can see that the spread is as low as 4 points, or in other words, as low as 0.4 pips at any moment in time. The MT5 trading platform also operates similarly to this. The best way to get a like-for-like comparison of your trading costs between brokers and trading accounts is to convert the fixed commission into the spread equivalent and then add that to whatever spread the broker allows you to trade from. The spread will vary between currency pairs, but I will use the Euro USD for this example because it has the tighter spread. However, the calculation is the same when comparing different currency pairs. So, when you trade one lot, which is the equivalent of 1.0 in volume on the trading platform, the value of 1 pip in the price is worth approximately $10. If a broker is charging you $7 per lot in fixed commission, the equivalent would be like adding 0.7 pips to the spread. Therefore, for every $1 per round turn lot that a broker charges you in fixed commission, you should add 0.1 pips to the spread. Many brokers typically allow you to trade from 0.0 pips spread and charge you around $7 per round turn lot in fixed commission. So taking everything into account, this would be the equivalent of trading from 0.7 pips. However, as you can see, TIOmarkets doesn't charge any commission on the VIP Black account, and they allow you to trade from 0.4 pips spread. So in this case, we just use the spread when making the comparison. What this ultimately means is the difference is typically a saving of up to and around about 40% on the transaction fees if you were to trade on the VIP Black account compared to any typical Forex broker. This is a significant saving in its own right, and these savings could potentially create other indirect trading advantages too. I will explain and show you what I mean. Whenever you place a trade, you have to cross the spread. Remember, you buy on the ask price and sell on the bid price. And this is why all your deals will start in the minus. So the price has to move the distance of the spread plus the equivalent distance of the fixed commission before your trade reaches its break-even price. Trading with wider spreads and higher commission fees means that the price has to move further in the direction of your trade to cover these costs. Trading with tighter spreads and lower commission fees means that the price has to move a shorter distance in the direction of your trade to cover these costs. A trader with tighter spreads and lower trading costs has an advantage over a trader that has wider spreads and higher trading costs. That's the long and short of it, really. Furthermore, it is more probable that the price will move a shorter distance rather than a larger one. So trading with wider spreads and higher commission fees can have a negative impact on your trading performance over time because you need the price to move that little bit further just to break even. And if you add all of those trades up, it can become a significant distance over time. It is all relative, irrespective of whether you have a small or large account balance to trade with. But the costs become even more exaggerated when trading in higher frequency or with larger lot sizes. Now consider the scenarios where pending orders don't get filled or pending orders get triggered prematurely due to wider spreads. These are losses that could have potentially been saved or missed opportunities that could have potentially made you a profit. Let me show you some scenarios where trading with tighter spreads can potentially save you even more money or even make you a profit. These are the indirect benefits that are seldom spoken about when comparing the costs of trading between trading accounts and brokers. So when you look at the price chart on the MT4 or the MT5 platform, you are seeing the bid price only. Okay? To see the ask price as well, you have to add the ask line option from the chart's properties menu. To get that, just right click anywhere in the chart area, go to properties from the pop-up menu that appears, make sure the common tab is selected and make sure that the show ask line box is checked. Okay, so now you'll be able to see the ask line, but you'll have to zoom in to see that, especially with a tighter spread. So if I come down to the 1 minute chart, you can see that horizontal red line. That's the ask line. It's a small distance away from the current price, and you can see on the vertical axis the distance. It becomes even more apparent when you're looking at a symbol or a currency pair that has a wider spread. So let's take a look at the euro versus the Mexican peso. Okay, you can see here that the spread is much more apparent. You see the horizontal red line, that's the ask line. You see where the current price is here, that's the bid price. The distance between these two prices is the spread. So the price has to move the distance of the spread plus the equivalent distance of the fixed commission fee before the trade is in a break-even price. So here are some of these indirect benefits of trading with tighter spreads that you would not otherwise get when trading with wider spreads. The first one is related to short sell positions with a stop loss. When you have tighter spreads, you afford yourself a little more room for error. If you have wider spreads, you have a little less room between your entry price and the stop loss, because you sell on the bid price and you close the trade on the ask price. Imagine a scenario where the price starts moving against you and it gets really close to your stop loss. When you trade for a long enough period of time, you will experience times when your stop loss gets triggered even though the chart suggests that the price didn't trade there. These are the times when a losing trade could have been closed later on with a profit, but because your stop loss was too tight or you are trading with wider spreads, you could be losing money to the market. The second indirect benefit to trading with tighter spreads is related to short sell positions with a take profit. If you have wider spreads, the price as indicated on the chart needs to trade a little further through your take profit order for the ask price to trigger it. When you have tighter spreads, the price doesn't need to trade through your take profit order as far, because the ask price is closer to the bid price. Many traders eventually experienced times when a trade was working out and the price got to where the take profit was placed but didn't trigger to close the trade. This can be quite frustrating if you have a set it and forget it approach to your trading, and for the sake of a few points your order didn't close and the profit wasn't taken. The third indirect benefit is related to buy limit orders, particularly those buy limit orders that didn't trigger but go on with the benefit of hindsight to be winning trades. Imagine doing your best technical analysis and placing your pending orders to trigger at the best price, only for you to discover that your analysis was spot on, but the trade didn't execute because the ask price didn't trade far enough through the buy limit order. These types of scenarios are missed profits. The fourth indirect benefit is related to buy stop orders, particularly those orders when you want to enter the market on the breakout of a price range. When you are trading on wider spreads, you have to place your buy stop orders a little further away, outside of the price range, to ensure that the trade gets triggered on a valid breakout. This is to avoid getting prematurely triggered in on the trade at the wrong time, or just because the price approached the resistance area but didn't actually break through it. When you trade with tighter spreads, you can be a little more precise and place your buy stop orders a little closer to the range. Now, some of you might think I'm splitting hairs here, but these indirect benefits are just a few things to consider if you decide to trade on an account type with wider spreads. If you trade for a long enough period of time, you will probably experience one of these four scenarios I have just spoken about. So, with all that being said, the key takeaways from this video presentation are the cost savings that you will benefit from when you trade with tighter spreads and zero commissions on the VIP Black account. The difference would be the equivalent of trading from 0.4 pips spread versus trading from 0.7 pips spread or more on another account type or with some other typical Forex broker. The indirect benefits are just a bonus. So are you ready to give the VIP Black account a try? Next, I will show you how you can create your own VIP Black account with TIOmarkets and give you a special promo code so that you can get it for $500 deposit instead of the usual $3,000. What you need to do is head over to www.TIOmarkets.com. Then click to register your profile. Go ahead and complete the process of filling out all of your information until you get to the trader dashboard. Now you can create your VIP Black account. Click the Open Live Account button, or you can try a demo first and configure your trading account according to your preferences. Choose your trading platform, MT4 or MT5. Select VIP Black account from the account type menu options. Then choose the base currency and the leverage. Read and check the box that you have acknowledged the terms and conditions, then click Open Live Account. Your login credentials will be immediately sent to you and you are nearly done. So check your email for your login credentials as well as further instructions to log into your trading account. The next thing that you need to do is to download the trading platform that you selected in the previous step. Head over to the download center and download and install the trading platform to your computer or your smartphone. This is where you will be logging in with the username and password sent to your email address in the previous steps. So all you have to do now is to make your deposit and transfer your funds onto the trading platform so that you can start trading. To do that, just click the deposit button. From the deposit page, choose whether you want to deposit in your local currency or in crypto and the method of deposit. Deposits with a debit or a credit card are instant. Go ahead and enter all of your details and the amount. It must be at least $500 or the equivalent amount in your currency for the promo code to work. Before you click the deposit button, click the promo code button and enter VIP 500. This promo code will allow you to be eligible to receive the VIP Black account with a deposit of at least $500 instead of the usual $3,000. TIOmarkets have lowered the deposit requirement for first-time depositors that are opening a new account. This promo code may only be valid for a limited time, so if you are thinking about getting started, decide soon to avoid disappointments later. Now go ahead and make your deposit by clicking the deposit button. If your deposit is successful, the funds should be updated in your wallet. The next step is to transfer your funds to the VIP Black account. Head over to Manage Funds and transfer your funds from your wallet to your trade account. Now you are done. The balance will be updated on your trade account and you can log into the trading platform and start trading. And that just about wraps this video up. I hope you found the information useful. So until next time, happy trading.